Hi, welcome to the Market Alert for Friday, the 24th of January 2020. So yesterday, stocks surge intraday despite global virus, NATO, and plunging US data. The contagion is off. So yesterday there was an announcement to say that really the contagion isn't too much of a problem, and this sent the markets moving higher. As can be seen by the daily chart of the Dow, the market coming off the lows and trading up towards the 76% retracement and back to those all-time highs at 29,400. So depending on the news today, and that is the most important part of the news, the rest is just flash news, is this. We've got the criminal out at 9:30 along with the Goldman boy, Mnuchin, Treasury Secretary, speaking at 9:30. So the pair of them must be colluding together somewhere around the globe. So watch out at 9:30 if you trade anything else like currencies, particular Euro, USD, etc. So they're speaking at 9:30. Meanwhile, yesterday the markets, again, perfect in its execution of bringing the markets back. As we see in the pre-market session, prices break below the 200 MA. They drop down nearly 200 points at the including the start of the trading session. We've got the selling there, and then we see the buying coming in. The market rallies up to the close and the low of the previous day before then moving down and then trying to bounce, then moving back, and then eventually heading north. So we see from this low to this high, price is trading to 76%, and then from this low to this high, 76%. So very predictable. You've seen this time and time again in the Market Alert, and long may it continue. It's fantastic. I love it. So again, just wait for the shakeout at the beginning and then try and catch a ride on the market. Of course, it's not going to do it every day, but certainly 3 to 4 times a week we're getting this at the moment. So the implied volatility down slightly yesterday, which is what you would expect, and also we've got still amber but heading back towards the 20 bar moving average here. Notice also how the corrections from May, when the market broke below the 20 bar moving average, how far away it moves, and the same back in August and then in October. But notice how much more less of a distance prices travel away from the 20 bar moving average. And this time here you can see this was back in December, and now we can't even get to the 20 bar moving average. Our corrections are getting smaller as they drive prices to the upside there. So again, I'm not surprised one bit. Meanwhile, in Bitcoin, we've got prices moving lower, closing at the moment or trading below the 20 bar moving average after banging its head against the 200 MA last week. Also breaking out of the sideways range yesterday. I see prices also finding resistance here and then moving lower once prices get below the 20 bar moving average. Yesterday prices also again below the 200 and also the 50 bar moving average. We see the selling in the market. Prices make their way down to the S3, and as I've said before, with regards to the pivot points, the S3, the R1 are areas where the market will 99% of the time actually stop and then trade sideways, and that's precisely what we see here. The volatility's kicked up a bit in this market, but not to a great extent. We're certainly seeing there's a $100 bar there, but we need this with all of the bars to make it worthwhile sitting and trading it. And you can see overnight prices are at the low of yesterday, which also happens to be the S3 for yesterday. So prices starting to move back from this area at the moment. Okay, that's a quick roundup of what happened yesterday. Like I say, the main thing at the moment is what is happening in the Dow, how it's being manipulated back to the upside most days, despite whatever news comes out, no matter how bad, including the data yesterday was bad, but it's just ignored, cast aside, and the market's free to move to the upside. Okay, that's it for this one. If there is anything else, I will let you know. But as ever, thanks for watching. See you in the next one.